which I don't want to do. Normally, Devin, who here knows Devin? Yeah, that's right. Oh my gosh, I bet he's more popular than me these days. Normally, Devin does the market update. Does anybody know what day it is today? It's Devin's birthday. Can we give Devin a big woo? Woo! That one's for you, Devin. So he's in Maui with his family for his birthday. Not bad, right? So I'm going to do my best to give a market update that Devin would be proud of. And, oh, great. Okay, we got her going again. Okay, so first things first, let's have a look at what's going on. What I did is I put red circles over the things you want to pay attention to. So the thing is, in Edmonton, what happens every single spring? The market gains some steam. Things slow down in winter, things speed up in spring. So it's very important when we're doing spring market updates to dive a little deeper and ask ourselves, is this activity tied to the greater economic picture? Or is the market activity tied to the fact that it's just spring? So let's have a look at some of the numbers that we should be paying attention to. So right up here, more sales happened. Month over month, 30% more sales happened this month than last month. Okay, sounds about right. We also saw the listing inventory go up by 15%. But this is what I want to pay attention to. That's still down 40% from last year, 12% from last year, which means that compared to last year's superheated market, things are much slower. This isn't really that crazy because instead of comparing this year to last year, we should compare this year to the last 10 years. Compared to the last 10 years, this is actually pretty on trend. So if I took last year, 2022, which was a crazy spring, out of the picture and asked myself, what does spring 2023 look like? Kind of looks like a spring market in Edmonton. So things are balanced and things are normal. And that's actually kind of okay. The one thing I also really am excited about is if we look right here, 1.9% increase in price month over month, which is the first time we've seen a month over month increase in price since the interest rates started climbing. So that's a good sign. Again, is that normal for spring or is that a sign of the macroeconomics? Well, I personally think it's more of a sign of spring, but I want to get into the macroeconomics because I think that if you're not optimistic about Edmonton, I'm hoping to show you why I think you should be at least a little bit optimistic about Edmonton. So what happened that I think is the biggest news? We had the first non-increase in interest rate in March. That's a big deal. The whole reason that interest rates climbed was to slow down inflation. That means that somebody with a big brain who's important thinks that inflation is slowed enough that they're willing to start stabilizing interest rates. That stable economy is what I think is going to create opportunity because the markets that were the most superheated are where the most people live. Vancouver, Toronto. However, Edmonton didn't go through the same hyperinflation as those two markets, which means there's room for us to catch up. There's a lag in market growth that I think we can fill. So let's see what that looks like. I don't know if the interest rate increases are over. I'm actually going to give a shout out to my man Keaton back there because he's more tapped in than I am to the mortgage market situation. He's our mortgage broker that I'm a huge fan of. He's on our power team. So make sure you just go up to say Keaton and say, hey, thanks for making this event free, and ask him what he thinks about this. I'll tell you what I think about this. I think that the US has increased interest rates and we play catch up. This is the graph comparing the two. By the way, I put all the sources for this information so you guys know I actually did my research and didn't just make this up. So we can see in red, Canada, blue, America. Boom. They increase, we increase. They increase, we increase. They increase, we increase. If we stay on trend, we're going to catch up in the next interest rate. If we don't increase, that to me is an indicator that things are really going to start taking off. Now, of course, big news. We had a couple of banks fail. What does that really mean? Why did the banks fail? I think that this is a sign of the market correcting from the hyperinflation we had. For me personally, again, this is my opinion. I don't think this is a cause for panic because it's one bank. It's not like back in 2008 when it was a ton of banks. So while this is a kind of like the tide coming back in a little bit, I don't think it's a full-on indication that there's like a market crash coming. Now, in the world, there might be. In Alberta, let's get a little bit more focused. So what's going on right here? Well, this is Canadian inflation back down at 5.2%. So did those interest rates work? Kind of. I mean, inflation slowed, interest rates went up. So it's going to be a matter of seeing what happens in the States. Unfortunately, in Canada, we're still in this wait and see mode. Between the banks and the States raising their interest rates, are we going to lag behind and try to play catch up with the States? Or are the powers that be in Canada going to be satisfied with that inflation rate? Historically, we're in the shadow of the biggest economy in the world as our neighbor. So I personally think that we still have a bit more interest rate kind of increasing to come. But I can tell you right now, what's going to happen in Edmonton if we see another non-increase rate or a non-rate increase? Well, I'll tell you, a lot of people, a lot of buyers, a lot of investors, maybe a lot of you in this room have been thinking, I'm going to wait and see. And you've been waiting and seeing from here all the way up to here. And the thing that people have been waiting to see is the sign of a market bottoming out. What people have been waiting to see is a sign of a market that's stabilizing. A second non-update with low inflation Canada-wide are those early indicators that that's happening. And I think that might drive action for a lot of investors. Now, in the meantime, let's get specific on Edmonton, because the Canadian economy is not the Edmonton economy. And in the Edmonton economy, because we're such a small population center, we get a lot of very unique opportunities because the trend in Edmonton is typically not the same as the trend in all of Canada. And the decisions that get made about things like interest rates are decisions that get made for Canada, aka Toronto and Vancouver, and not decisions that get made for Edmonton. So what's happening in Edmonton? Well, first things first, 40 billion in new oil investment. That is a lot. That is the most in a very, very long time. And yes, we're going green. We're not there yet. And so all this investment in oil infrastructure means oil's coming out of the ground, money's coming into the Alberta economy, jobs are getting created. From my own personal perspective, for the love of God, I hope we spend this next round of oil money on investing in green tech so Alberta can be less oil dependent going forward. That's my little soapbox rant. Vote for me, 2027. I don't know. Anyways, economy adds 22,000 new jobs in February, and unemployment is now back down at 5%. 22,000 new jobs. We don't have 22,000 people to work those jobs. That's why people are coming to Alberta in droves. That's why population is growing. In fact, Alberta remains a migration target. Alberta gained 11,000 residents in the fourth quarter. That's a lot. And they're coming from all over the country. There's 500,000 new Canadians targeted as the growth from the Canadian government for 2023, and another 500,000 targeted in 2024. People want to go places where they can make money to put food on the table for their family right now. That place is looking like Edmonton, Alberta. So while the Canadian economy is doing this stabilizing thing and kind of lagging behind what's going on in the States, I think little old Edmonton is kind of having our own little party over here because we're this hot spot in the Canadian scene where it makes sense for people to go because oil's becoming a thing, jobs are becoming a thing, and people are moving here. Here's what I think is going to be the cross-referencing statistic. This is housing starts. So you can see right now, the housing starts for the start of the year are way down. That means new houses that have been permitted to start getting built. So if this number doesn't spike all the way up here, we're going to have a serious supply and demand mismatch, which is going to drive house prices. So it's already kind of too late because if the housing starts haven't been started, this lack of housing starts right now mean that when another 10,000 people a quarter minimum show up to Alberta over the next 4 quarters, there's going to be nowhere for them to go. That's going to be a supply and demand mismatch, which I think is going to drive prices, which also collaborates with the fact that Edmonton's inflation has lagged behind the rest of the country. So we've got 2 things working in our favor: a supply and demand mismatch in conjunction with the fact that the gap in pricing between Edmonton and the rest of the country has grown because the rest of the country inflated more than we did. So another leading indicator of house price growth is rents. When rents go up, it typically then drives housing prices. So this right here is the price of a 3-bedroom in Edmonton. Okay. Holy smokes. That line right there is good news for us as landlords. So if you own a 3-bedroom that's halfway decent and you're not charging at least around $1,600, take note, do something about it. And in addition to that, understand that this is a leading measure. House prices follow behind rent prices. So what does that really mean? Oh, this is Adrian's first slide. Okay. What does that really mean? Things are looking good for Edmonton in terms of leading measures. Are house prices growing? No. Are they starting to grow? Yes. But my caution is that right now the picture looks like Edmonton Spring Market, but the leading measures of the things that typically happen in Edmonton, Alberta, that have happened the last 3 or 4 times since 2001, that we've had major growth in the market, all those things are happening. Jobs are getting created, money's getting spent on oil infrastructure, people are moving here, rents are increasing. Okay, all that stuff is happening. Typically, the thing that follows those are house prices. So I think that if we see another interest rate increase at the April announcement rate, there's going to be a little bit more wait and see vibe, and the window to buy before things really start cooking is going to be bigger. But if the interest rates don't go up in April, a lot of people are going to say, okay, I've waited. What I've been waiting to see is a stable market. They're going to perceive a stable market. And I think a lot of that Canadian capital is going to start flooding into Edmonton a little more aggressively. So as Edmontonians, like, it's right under our feet. As Canadians, I mean, where's Rebecca? She gave a shout out to Michelle Bond, one of our clients in Vancouver, who's buying in Edmonton. Michelle's not alone. There's a lot of people just like Michelle who are in Canada, who look at a bungalow in Vancouver costing 1.5 million and that same bungalow in Edmonton costing 400,000, thinking, okay, this is what I should be paying attention to. So Jen kindly gave me the stop talking sign, which perfectly lined up to the point at which I was going to stop talking.